right, let's go ahead and get started. Thanks for tuning in, you two. Like I said just a minute ago, pre-recorded. So for those of you tuning in later, we're sorry that you didn't make it live, but it's going to be a good walkthrough. It's going to be similar to the tutorial video, but we're going to be going over the homework specifically that I discussed in and posted in the homework section. So if you're not using that, I'm going to be using that more often every single week. Really trying to promote some additional interaction and participation as we really start to navigate the flashpoint indicator and trading strategy. I don't know if you guys saw, but I've been posting some things. We're actually developing an automated algo trader that is going to also be able to be used with Flashpoint, which would more or less be one of those systems where you put money in and it's just going to take the trade signals without you having to do anything. So that's on the horizon, working on the coding for that, but it uses the same exact strategy that I'm teaching here as we manually do it, also with the indicator. So you're going to just continue to hear a lot more about Flashpoint, a lot more about this strategy. I think that it's been great. It has very clear parameters. So far, the back testing on the strategy itself has proven profitable. And so, it's going to be the model that we're teaching here on the Discord. So I want everybody to be very familiar with it and everybody to understand it so that they can interact with the homework as well. I think it's going to all help us grow as traders. So that Flashpoint homework, I'm going to be posting 1, 2, 3 charts a week, something like that, asking for, participation with interacting with the chart, letting us know, hey, where's the entry? Where's the exit? Why was it a good trade? All these different things, as we, again, continue to promote you guys learning here. Aquazar, you said the sound is bad. Is anybody else experiencing sound not being good? You tell me, is this any better? I think I had you on the headset mic. And now,
yeah, that sounds good.
Okay, great. So for some reason it defaulted to the headset mic that I wear so that we don't get feedback on the channel. I got you on the actual mic now. So hopefully everything's you at least heard what I was trying to say, even if the sound is bad. So let's go ahead and jump into the first chart that I had posted in the homework section. And so the question, basically with that homework was, let me go back and just double check. So why do we take the entry? How do we assign the stop loss? Where's the take profit? And what builds confluence in that trade setup? So it was a short trade. I'll give you that. And I'd love to hear from you guys. If you want to unmute, I'll certainly explain it. But I'd like to hear if you have any understanding of this setup that we see here on the screen. And if you don't, that's totally fine as well. All right, so I'll just jump in and tell you, this is not a chart. This is a screenshot. So I can't show you exactly as if it was a live TradingView chart. But we'll talk about it because you can see my pointer. So the short entry on this trade here comes off of these green candles. The first white candle that closes, you see this line here between the red and the green. Okay, that's where this first white down close candle closes and the second white candle opens. Yeah, no worries, Mountaintop. We'll if you guys can't interact with it, that's totally fine. Happy to have you guys even here at all to discuss. Again, more interaction in the homework section, so that's fine throughout the week. So entry comes here, first breakdown candle, down close candle here coming off of green candles. So this is a reversal in momentum indicator and strategy. So we have the up closed green candles, right? We have our bullish momentum. We get our first white candle down closed. That is our indicator or indication that the trend has reversed. Okay. We take our entry on that first candle close, second candle open. We're basically looking for that candle to close and then hammer that buy or sell button, right? So we already want to kind of have an idea of what trade we're taking. So oftentimes what I'll do, because I'm manually charting this long and short tool, and if you don't know where that tool is, that's over on your TradingView. If you're using the desktop or web app version, it is right here. It's these three little lines with this dotted line going through it. That's projection tools, and the top two, long or short, those are going to be the tools that we use to basically illustrate or provide, visual representation of the, take profit and stop loss area. So go back to the picture. So our entry comes here. First candle, white candle that closes. Second white candle opens. We enter there. Okay. Our stop loss is going to be back up here. It's going to be at the previous high. And we set our stop before we set our take profit. So this trading strategy is a 1-to-1 risk reward ratio. Okay, it's always a 1-to-1 unless you're taking multiple lots. Like if you got 5 contracts, you can trim the majority of them, 3 or more, at the first take profit, and you can let the runners 1 or 2 contracts run. But if you're just trading single contracts, you're going to take that close at the 1-to-1 take profit. Okay, if you don't, that's on your own risk. The other alternative to not taking the 1-to-1 is to trail your stop up to break even, and you can allow that to run to the nearest liquidity. But that, again, that's on you if that's the risk you want to run. I'm promoting this as just a 1-to-1 trading strategy. I still always promote like 20% or higher contracts, profitability on your contract, trailing your stop back to break even regardless, so you don't lose money on those trades. So we take our entry here, right? We set our stop loss at this previous high, and then we just measure out a 1-to-1. Okay, you see that 1-to-1 is right here, and on that 1-to-1, the target hits. Okay, now Aquazar, you did mention an inverted fair value gap. This trading strategy really doesn't involve the smart money concepts in the aspect of fair value gaps and inverted fair value gaps or order blocks necessarily for our entries or our exits. We do want to know what those things are because liquidity is in all of those areas. And you're absolutely right. There was a inverted fair value gap from this green candle that was a bullish fair value gap, and this white candle, which was a bearish fair value gap. So that bullish fair value gap inverting becomes our inverted fair value gap. So if we were using smart money concepts, that return back here to that inverted fair value gap, that would have been our entry point. Okay, but we're already in the trade down here. Little bit of price difference in that, but still good trade. Not too worried about this little price difference between this candle close and this return to fair value gap. We're not going to necessarily worry too much about maybe like 25-50 cents because this is the strategy we're using with FLASHPOINT. Now if you are trading just smart money concepts, all the old principles apply. The goal of this FLASHPOINT trading strategy was to provide something that was more simple, that was less time intensive for traders to be able to follow and use without having to spend the multiple years worth of mentorship programs that ICT has on YouTube. Although really good to understand, it's very time and labor intensive, and so this strategy is much more simple and still very effective. Raymond, you asked how to get to 1-to-1. I'll show you a quick example here. So when we use this tool again, the forecast tool, let's say we're going to grab a long. We'll click on the long position. You'll click on the candle where you want to place that entry. So let's just say we got green candles here and a white candle here. Okay, we will click on our entry. Oh, that's a short. Let me grab the short tool. So we got green candles, white candle. Here's our entry point. And then all of these parameters you can drag. So we'll drag, if you're on your mobile, you got to just click on the little circle or the square and then drag it with your finger. But if you're on a desktop or a web app, you can just click it with your mouse, drag it down to our most recent high, because this is a short. And then we'll drag this one up so we get our 1-to-1. And it says right here, risk reward ratio 1. Okay, if the reward is greater than 1, that number will go above 1. If the reward is less, that number will go below 1. So we'll set it at 1. And you can see I didn't have this one listed on this chart. You can see that trade hits before it stops. There was $1.67. It'll show you how much profit on the underlying there was. Right? Don't regard the amount here, because that's going to be based on ticks, like if you were trading futures, that would be important. But right here, the target, that just tells you how much profit on the underlying. So $1.67. So, depending on what the delta was, it's going to be, maybe a delta of 50 or so. So it's going to be, a little over $75 on that short. Now, these candles were also rapidly turning red, so delta might increase more quickly, and you might squeeze out $100 or more on that specific trade. So short and long position, again, is over, if you're using the web app or the desktop app, it's along the left parameters. It's below the patterns. It's called forecast and measurement tool. And then it's right here, long position, short position. There's some other tools in there like anchored VWAP, but for most of the time, I'm just using the long and short position. If you're doing it on the mobile app, you click on the drawing tool and you just scroll down to find long or short projection or long or short tool. And from there, you can favorite it and it will show up at the top of your drawing tool. Okay, so we'll go back to our screenshot of that first homework trade. So we have our entry point, we have our stop loss, we have our take profit. Okay, so now what I want to know is what builds confluence in this trade. Why do you guys think that this, was a good trade to take? Because not every trade is going to be a great trade. I mean, you got kind of like, I'd say, like an ABC kind of rating on some of these trades. So do you guys have any idea why the confluence is built in this one? Just using exactly what's here on the chart.
Certainly the trend is to the downside.
Yeah, absolutely. So that's a good piece of information to note, right? Our blue trend, so our white trend is a 3 EMA. That's a 3 EMA using 9 period on a 3-minute chart. That's going to show up the same on every chart, all the way up to weekly and monthly. So it's what we call a multi-time frame EMA, where it's static or it doesn't change no matter what time frame you go on your chart. So that white line is always the 3 minute multi-time frame EMA that is based on 9 candles. So it's a fast trend on a 3-minute chart that shows up on every chart. The same, right? The teal line is same thing, but for 5 minutes. So 5-minute chart, 9 periods. So that's 9 5-minute candles. And again, same thing, multi-time frame will show up on every chart. The blue one is our 15-minute. This is very important to understand with this indicator. The 15-minute on all the charts, that's going to be our intraday trend. So when it's trending down, intraday bearish, when it curls up or starts trending up, we're looking for the potential for the bullish, the bullish trend the trend to change bullish, right? So what was mentioned is that the trend is down, right? So our daily trend moving down. We also have our yellow trigger line, which is our 1 hour, and that's going to more or less kind of determine like the trend over usually the next few days. It's not over the entire week. We do see some variation in that 1 hour, usually between 2 and 3 days. unless we're just in a full down week. But I think that that's more rare, that we just have only up or only down week. So we're kind of looking at 15-minute intraday, 1 hour over the next few days. And then the daily trend is kind of like our gauge for the week. So if we're below the daily trigger, the week is generally bearish. If we're above, we can get bullish, or sometimes we just kind of chop back and forth over it as we're trying to reverse that trend. So we have our trend, it's down. Other things to notice about what's on this chart here. And I've mentioned this before, but this is very important to understand. We have, as part of our indicator, we have our 9:30 open price, we have our 8:30 data price, and we have our silver bullet macro open. Okay, silver bullet macro is the 10 to 11 o'clock macro. There's usually a pretty aggressive move that happens during that time frame. There's data that usually drops at 9:45, 10 o'clock. You get the algorithm spooling at 9:45. Oftentimes, you also oftentimes see a good reversal that occurs in the silver bullet macro. No guarantee on when that reversal happens, but usually in that macro, we see some kind of reversal. So those are important timestamps to understand. Now, the lowest one, when we open the 8:30 and 9:30, before the silver bullet's painted, the 8:30 and the 9:30 are our bull bear pivots. Okay. And it doesn't matter which one is on top or bottom, but that's going to be our bull bear pivot for the day. Once the silver bullet gives us a timestamp, now these ones are all stacked on this, so they're very close, but if they're separated, you can use it as an additional pivot. So if we're below it, say in this case, even again, though they're stacked, our 9:30 open is our bear pivot. Okay, our 8:30 data is our bull pivot. So above 8:30 data, we could be bullish. Above the silver bullet timestamp, we're even more bullish, all the way up to the potential daily open. You can see we don't get really above the silver bullet, so we don't target that next daily open level. But if we did get above it, that would be the likely target to be very bullish up to that level. Okay, but here below the 9:30, we're bearish. So not only is the intraday trend trending down, but we're below the 9:30 open price, so that builds confluence. And also we have the 1 hour trigger trending down as well. So all of those things continue to build confluence in this short trade versus taking a long trade. Not that a long trade wouldn't play out when they're presented, and I'll show you on some other charts where those do play out. But the A plus setup here is all things pointing bearish, and then we get that white candle and we take our short position. Let me move to the next homework. That was this one here. Same kind of thing. Anybody want to take a crack at this one as to why or how this setup occurred, where, how we determine the stop loss, how we determine the take profit, what made this a good setup? So you can drop it in the chat. I'll go ahead and just go over this one as well. Same thing, right? The setup, the indicator is always the same strategy. That's why we like this. That's why I developed this indicator. That's why I like it. The parameters are clear. The rules are clear, and you take the trade according to the rules, right? So we have red candles. Okay. We have our first white candle. There's our entry point. We set our stop loss down here. Now this one isn't perfectly set, but it would be at this previous low right here. Our which doesn't get hit. Our take profit is a 1-to-1 risk reward ratio, right? And you can see there's our entry, 1, 2, 3, 9 minutes. Our take profit gets hit, and that ends up being a total of like 418.25 up to 421 and a half. So like $3 and some change on that move. I don't love this setup as much as every setup. I'm going to tell you why, but what builds confluence in this, if you're just looking at what's shown in the image, we have stacked bullish fair value gaps down here. Okay, so that is telling us that there has been bullish momentum through those fair value gaps, and they're all stacked up. We also are, you see our 930 stamp, we see our 830 stamp, right? And this is coming out of the lunch hour. So silver bullet has already occurred as well. So we're above our bull pivot and we're above silver bullet. So that is more bullish. And this candle that we enter on as it closes is above the silver bullet, right? We don't have a clear defined trend yet. You can see the trend was oscillating. So that's one thing I don't love about this trade, was that we're not trading with the trend on this one. We were trading kind of in a choppy range. Now you see it ends up blowing off and a trend does develop, but this is later in the day. So we must have had some consolidation kind of over this lunch period. So that does change the confluence a little bit. Now, when you start to see things like this bullish fair value gap appear, that builds some more confluence that we're probably going higher. But again, the trade is the trade, 1-to-1 risk reward ratio. Right? If you're only running single contracts, you take the exit. You can always look for another entry. If you're familiar with smart money concepts, you could wait till we pull back into that fair value gap, take an entry there with a stop loss below the fair value gap low, and then see if you can get a pop off it. We never got that. Another thing that I haven't really taught you guys much, because I really want everybody to understand the indicator and the setup before we get a little bit deeper into the weeds with some things that you can look for to build confluence in the trade, or at least to build confidence, is that usually we want to see within 3 white candles, we want to see the move into green candles. Okay, it starts to not look as promising if those candles don't start turning green. Usually we're exiting the trade on green candles, but sometimes you can get chopped in white candles, and it'll just go back and forth and it might hit your stop loss. So that is something that I look for. This one took a little longer, but what I saw is us continuing to kind of wick this silver bullet and hold this level. So there's some confidence in that trade. But again, I'll run the trades to stop loss, because that's how the rules are, right? You enter, stop loss, take profit. If your stop loss gets hit, oh well, you move on to the next trade. Using this indicator, there are plenty of trades. We're tracking like 5 to 7 trades on average per trading day, only including like market open hours for options, not including pre-market, not including like all the trades that you could take if you were trading futures. This is just for options markets. So there's lots of trades throughout the day in different sessions. Another important thing to know with this indicator is you're not taking opposite trades when they present themselves if you're already in a trade. So we're letting the trade play out. And what I mean by that is, you can see over in this white candle, right? We came out of red candles. This is a really big breakup candle. And I don't have the rest of the chart here, so I don't know for sure if it got stopped out. But this would have been an entry point on this breakup candle, right? Above the silver bullet, above the EMAs. Okay, we would have taken our entry here. We would have had our stop loss. Actually, it would have been in this New York macro. So our stop loss would have been probably, I think there was equal lows if I remember correctly. But our stop loss would have gotten tapped. I say you got to wait for the candle to close below the stop. You may risk a little bit more if it goes below, but I'm not taking that stop on a wick, because there's a high probability there's a liquidity raid or liquidity sweep or stop hunt, unless you get those candles closing below. So in this case, there would have been a long entry here, and then you come off of green and there's a white candle here, there would have been a short entry there. So we're not going to take contradicting trades. We're going to let this trade, if we were in this one, play out, okay, and then see if it comes back down, see if we get stopped. If we don't get stopped, you let that trade go back up to wherever the take profit is. It would have gotten hit too, because in this case, I don't think it got stopped. So you would have hit there if you didn't hit this trade here. I don't encourage doubling up on trades as well. Like if we get, you know, a long entry here and a long entry here, that you're taking trades in both. I don't recommend that. We want to really like monitor our risk here. We want to monitor our position sizing, right? And then just let the trade play out according to rules. I know that some people had asked some questions in the Flashpoint homework specifically, so I'm going to jump over there real quick and just make sure I answered all the questions. I know Serious Rose had posted some things as well. So Serious Rose had asked about using 930 as an entry. So again, just to reiterate, the 830 data and 930 open are our bull bear pivots. Whichever one is on top is the bull pivot, whichever one on bottom is the bear pivot. In between those is more or less, you know, a chop zone or potential consolidation range. But above the whichever one's on top is bullish, below bearish as pivot points. But sometimes we can still take contrarian trades even when we're, you know, say below the bull pivot if liquidity has been swept. So doesn't mean that we have to trade, you know, if we're below the bear pivot, doesn't mean we have to only take shorts, but there is confluence in the trade if we're looking for shorts when we're below the bear pivot, or looking for longs when we're above the bull pivot. So Armin also mentioned there is a conservative approach and a liberal approach to where we place our stop loss. I just want to reference that just so you guys are aware. You might get stopped more often, but you will definitely mitigate how much risk there is by changing the stop loss. I run mine in the more liberal way most of the time. That's what I recommend. But there is other ways to do it too. So if you're going to run it on a tighter, more conservative approach to your stop loss, you're going to place your stop loss below or just right at the low of the first white candle. And so on this image here, you see there's that little wick there. Right? We came back down and we tested that low, but we didn't close below it. So would have been a tighter stop there. This trade would have still hit. Now, on the trades that do get stopped, where we completely end up running through the stop, having that tighter trade is going to save you a little bit of loss. But there are occasions where we do come and take that stop loss first, and then the trade goes in your favor. So that's just up to you guys to decide how you want to run it. Again, the way I'm running them is the more liberal approach with the looser stop loss. Leaves a little more risk on the table, but again, according to your 1-to-1, the reward's going to be relative. So if you're running the stop loss tighter, you're also expecting less profit. So Raymond asks, above 830 and 930 open, this will be bullish. So if we're talking about just this trade setup here, above 830 is bullish. It's the bull pivot. Down here below 930, that's the bear pivot. In between here, there could be potential for chop. Okay. But what the important part to know, Raymond, is that it doesn't matter if 830 or 930 is on the top or bottom. Those are irrelevant. Okay. Like you could call it time 1 and time 2. they're going to flip flop. It just depends on where price opens at 8:30 and 9:30. But the lower one is always the bear pivot. The upper one is always the bull pivot. Let me look at the other one and see if we have it flip flopped where 8:30 is on the bottom. That's the same. Let me go see if I can find it in the chart. Okay, so here's one on the chart where 8:30 is the lower one, 9:30 is the upper one, silver bullet is above that. So I'll kind of zoom in here so you guys can see it a little bit better. So here we got 8:30 price, 9:30 price. You see we cross over 9:30 price, right? And it makes a bullish move. Okay. Once we end up coming back down below that 9:30 price, okay, this is potential chop zone. You see we go up and down in between it. There's some little bit of consolidation in that area. So it's just chop, it's undecided, right? But once we cross under that 8:30 data, or that bear pivot in this case, right, then we get our move, right? There's that dump. So these are just pivot points. The one on the bottom is the bull, or is the bear pivot. The one on the top is the bull pivot. And then wherever the silver bullet macro open price falls, wherever that line is, that's going to give additional confluence to potentially move us higher, right? So you can see here, we have an old silver bullet high. Okay. And when silver bullet macro opens, we end up getting that move up to that old liquidity level. And you can see it hits it perfectly. So, but once we fall below it, what are we going to target? We're going to target the next level down, right? And then we're going to target the next level down. What do you mean you lost me? Like, do you mean you can't hear me, or you're just getting lost in the explanation? Can everybody else hear me? All right. Well, my mic looks like it's still hot. So, okay. Aquazar says he can hear me. Perfect. So I'm not sure what Raymond's referencing, but if you guys are tracking this, these levels that are going to print on the indicator, they're just targets, and they're just pivot points. So when we get above one, we can target the next one above that. When we get above that one, we can target the next one above that. And they're going to show for like the entire week worth of opens and closes. So, you know, they will indicate different levels. And if we like zoom, you know, if we zoom out and look at some other ones, right, we see this move up. And then when we make that move down, there's our silver bullet, there's our 8:30 data, there's our 9:30 data, right? We come down and we take all those. Market maker buy model, market maker sell model, right? And we come back down and we take those. So they can always be targets, right? Then, because this is a move that is meant to go higher because we set a higher low, right? Then we push up, and there's those targets, right? Silver bullet, 9:30, 8:30, we move up. There's liquidity, right? Now here, on a different day, there's our 8:30, our 9:30, and our silver bullet. Right? So we come down, there's our prices, we come back up, we hit those levels. So they can just be targets. They can just be targets for us when we're taking trades. So now I'm going to look at a few trades from Friday. We took some of these trades. I didn't take every single one of them. But we're just going to look kind of at the day. Hold on, somebody's saying the link doesn't work to join the live room. Oh shoot, we're in the premium live room, not the free live room. Oh well. This will be free for other people to watch, so that's all right. I'm not going to worry about it. So if we're looking at last week's Friday price, let's just look at the different setups that were provided in market hours. So here's kind of the first setup. This is opening price here, or maybe right here, 9:30 open price. You see that's that white level right there. And we got red candles, right? We get our first white candle. We take our entry, stop loss, right, at the previous low. Risk to reward ratio 1. Okay, this is what I'm talking about. 1, 2, 3. We ideally want to hit green candles within 3 candles. Ideally, right? We want that fourth green candle to be our exit, because then maybe the candles go higher, maybe they reverse, but we've got our trade. That was a $3 move, right? And it hit it in 9 minutes. On this one, we are below the 15-minute. So there's not an A+ setup, right? We're kind of against the intraday trend, but it's a new day. So we don't know. There wasn't a whole lot of movement. You saw we had this 15-day intraday pull up. There wasn't much action here. We kind of got that flush during the New York AM pre-market, okay, which started the trend pointing down. But that moved back up again, started the trend moving up, and we had a fairly flat 1 hour. So there was not much, not much trend over the next couple days expected, as we just kind of were oscillating over that 1 hour. So not an A+ setup, not with the trend, but this is just an example of how you can take those contrarian trades and they're still going to pay out using this strategy. Okay, so $2.93 move on that one. We got green candles. So, and now we're in our silver bullet time macro. We get our first down close white candle. Okay, here's our stop loss up here. It's a $4 move on the underlying to the stop loss. Okay, here is our take profit based on, actually, there's our take profit based on a 1-to-1. You can see it's also a liquidity level. Imagine that, right? We run right onto that liquidity during the silver bullet time macro. Entry, stop loss, exit, take profit, 1-to-1, right? Didn't do it in 3 candles, so it starts to get a little bit like, is this trade going to play out? Especially when we get this move up here, right? That runs towards our stop loss, but didn't quite hit it. So it didn't happen in 3 candles, but I'm not going to close the trade because it didn't happen in 3 candles. I'm just now eyeing it, thinking, it didn't move rapidly like this one. Okay, but it still continued to go in our favor. We get a couple red candles. We get that move. We get our profit, $4 on the underlying, right? Now we got red candles. Okay, this one again, no confluence. This 15-minute EMA we're just kind of oscillating back and forth over it. But we get our red candles, we get our white candle. Okay, here's our entry. You talking about zooming out to the 15-minute time frame? Yeah, you certainly can. Just keep in mind the indicator is still going to show colored candles on the 15-minute time frame. Do not trade those colored candles. I still need to make some updates to the scripting, and I haven't made any updates because as soon as I make the updates, it's going to change all the settings for everybody, and then they're going to have to all go back and put the custom settings back in. So I just haven't done that yet. So yes, good to look at the 15-minute. Do not use the colored candle coding. with this indicator to trade the 15-minute. Yeah, definitely to monitor the trend. Yeah, always good to look at all the different time frames: 1 minute, 3 minute, 15-minute, 1 hour also, daily, unless you're like a swing trader or longer swing trader. But this is a 3-minute scalping indicator, so you can use that 15-minute chart to keep an eye on the trend. And maybe you only want to take some of the trades that are with the trend. That's fine. That's on you. I'm just showing how this indicator works regardless of what the trend is, and how you can use it, right? So this one hit, right? So then we got red candles, we got our white candle, we got our entry point, we got our stop loss down here. The move is $3.76. This one hit late. I'd call it a hit just because we did get this wick up here that was very close. Didn't close above. I'm not waiting for candles to close above to take profit. I am waiting for candles to close below on a stop loss. Okay, so I would have taken an exit on this trade. It didn't officially hit till over here, so then neither of these trades would have been closed out if you were waiting. But because of this being ultimately like a $3 and probably 25 or 50 cent move, I probably would have taken that close anyways, as these candles were painting green. But it does hit over here. Again, just wouldn't have taken those two if you were still in that trade writing it out. This one here, again, coming out of green candles, we get our white candle. Okay, there's our entry point. Our stop loss is at this previous wick high here. Okay, there's our take profit. You see we wick the stop, but it's a hard rejection off of testing the 1 hour and the 15-minute trigger. No candle closes above the stop, so I'm not taking the stop. Okay, and then the trade ends up hitting. Again, didn't happen in 3 candles, which is what I would like to have seen, but still got a nice rapid move down here, right? And then a few candles later, gets that continuation to get that close. $2.62 move on the underlying. Red candles, right? So we're looking for our entry in after colored candles. White candle close is our first entry. Okay, white candle close. There's our entry. Stop loss at the previous low. Okay, 1-to-1, $2.18 move. 1, 2, 3 white candles, green candle, right? Hits our take profit. Once we're above the 15-minute trend and we're holding it, we start to see that confluence for a more bullish move. So this is where it's kind of trader's choice. If we have a trend that's developed, you may not want to take the contrarian trade until you feel like the actual move has finished. And that's where some of this is still, open to you interpreting. I will show you how this would have been a loss if you would have taken it, and also why it doesn't seem like a great trade. So we get green candles. The rules would say take that first close, right, with a stop loss right there, and then a 1-to-1. And that's fine if we take it and we lose, because we also just had 5 winning trades in a row if we took all of them. But green candles, white candle, 1-to-1, right? We get stopped out 1 candle after we enter. So that would have been a very quick stop. Why it's not a good trade is because we now have a uptrending 15-minute. We are now above the 1 hour. And if we go look at our bull bear pivots, right here, we are above 830 price. We are above silver bullet price. We are above the daily open. All these things, right, is bullish confluence.
Got it?
Hey, Raymond, you want to mute yourself?
Yeah, I can't hear you. I had to exit and I come back in. Now I hear your voice.
Okay, great. Yeah, I'm not sure what was going on with your thing, but it's all recorded still. Everybody said that they could hear me, so you'll be able to catch back up. We're just going over some more examples. So again, this trade would not have been a good trade to take. But again, if you're just going to follow the rules and take every trade, that's fine. You'll still, have more wins than losses. You'll still have good results with it. But you'll, if you can't read the triggers and the trends, then you definitely will get some losing trades in there. Okay. Now, similarly, we have that trend going and we're above all the bull pivots. So what I'm looking for is I'm actually looking for long entries at this point until I feel like liquidity has been taken. And that liquidity would be up in these previous levels, right? There's an order block here. There's 930 and 830 price. Then the next thing up is an order block, right? And that daily open that is shown here on the chart. So once we hit these, that's where I kind of expect the move might be done until we make a run back up here. So if we don't make a run instantly during this New York PM session at that order block, then the liquidity was taken at this previous 830 and 930 price. And at that point in time, trading session ends. So I'm not worried about taking any trades, any scalps. But once we're above those trends, right, I'm looking where are we likely to head? We're likely to head here. So I'm looking for long entries. So we get red candles. You can see confluence is built with this fair value gap, right? Again, we're above all the bullish triggers or all the bullish pivots. Okay, so here, red candles, first white candle. There we go. Stop loss right there. 1-to-1 right there. Okay, you see that's right around where our previous day's pivot levels are. Also right where this New York lunch macro high is. Okay, and that's all I'm expecting is a move up to one of these liquidity levels before we potentially get a reversal. So you see $2.68 move. So if you took this one for 216 and then you took this one, right, then you made up for it. Just for transparency's sake, green candles, white candle. If we're taking every single trade, stop loss, take profit, right? It's right there. $1.69 move, contrary to the trade. So you can still take them. You're still going to get wins with them. Not everyone's going to be a win. So if we're looking at a win there, a loss there, a win there. Okay, red candles, white candles. Right. Again, looking for long entries. Now this is the end of the day, so you may or may not play this trade. But there's our setup. There it hits. It's all white candles, so it doesn't look great. But stop doesn't hit, profit hits, winning trade, right? And at that point in time, we're not going to trade anywhere in that final 30 minutes. Most of us can't trade using Webull or Robinhood anyways. So if we just go back and look over yesterday or last Friday, I mean, only the trades that we could have taken during market hours, and the results are similar almost every single day. So I mean, you can go back and do the tracking. I've been posting all the days setups for quite a few different days, just to show you guys how many wins versus losses there are using this strategy. But we have a total of 1, 2, 3, 4, 5, 6, 7, 8, 9 trades that were available, right? And one of them was a losing trade. And then technically this one did not hit until over here. So you could say that these two are moot until this one hits. But either way, one losing trade is not a bad ratio of winning to losing. And that's just for QQQ. That's just for 0-day scalps. Now on Friday, you can scalp 0-day on all the different assets. So you choose. The results are, fairly similar across the board, no matter what ticker you're trading, as long as it's a high liquidity asset that has some volatility to it. Can't guarantee that you won't get stopped out more on some of the other tickers. I think there was a few that we looked at last week, just kind of in the chat rooms, that didn't perform quite as well as QQQ. Again, this is kind of built as a scalping tool, and QQQ is or SPY or any of those ETFs are great to use this on. You guys have any questions about this? I am working, why you potentially present some questions. I am working right now on, again, we talked about it in the beginning of this, but on an automated trading algorithm strategy that when it's done, we'd be able to just use on an automated trading account. But it will also, for those of us that don't trade automated trading accounts or don't plan to, it's going to have like a buy sell signal exactly where on the candle close, right at where we would take that trade. So as soon as that candle prints and closes, there will be a buy or a sell signal. But I'm still working on the coding, so that's not ready yet, but it's in the future. All right, well, I'm going to take the lack of questions or comments as that you guys understand this. It's not super complicated. It just takes practice. It takes getting used to. I know it's a lot different than, the ICT specific trading that we have been doing in this Discord. But, again, what I really like about it is it doesn't take a lot of time to understand, where ICT has so many different strategies within the concepts themselves that it's easy to get lost in how the trade was taken, where the stop loss is. I feel like there were just a lot of trades that were not going well, when traders were following, specifically because they don't fully understand the concepts. And so this one, is nice and easy. Like I said, clear rules, clear parameters. You just follow the rules, take the trades as designed, have good results. So we'll continue to teach more and go over covering the homework. Like I said, for the week moving forward, I'll be posting the Flashpoint homework charts. Would just like you guys to interact. Also would love for any of you guys to post your own, Flashpoint chart setup in that homework section as well, just to show that you guys are actually able to chart those setups on your own without me giving them all to you. And then please use the tracking journal and the data tracking journals. I have that forum set up for you guys to be able to, post your screenshot of the trade you took, comment on why you took it, what you thought was a good setup. And it doesn't have to be all related to Flashpoint. It could be anything you want. It's just good to get used to and in the hang of or habit of tracking your trades, because it's easier to go back and look at something and reflect on it as to why potentially something went wrong if we are journaling about those. And it's also an opportunity for everybody to learn from whoever's the journal author. So use that, please. And again, if you have any questions, post them in the premium chat, or send them in direct message, or put them in the Flashpoint homework section. Thank you guys for attending, and I will see y'all the next time.